Hello everyone, I'm Dan Basse, President of AgResource Company, joined by Ben Buckner, our grains analyst here at AgResource, to talk a little bit about the grain markets following the USDA crop report. However, before that, I did want to mention that a lot of discussion going on about Chinese trade tariffs potentially coming from the United States in coming days. We at AgResource have no idea what President Trump will really determine, and that colors this outlook just a little bit. But besides trade ban, and we get beyond that, I mean, when you look at world corn stock use ratios, I think it's about 50 or 51 days as I calculated, the lowest we've seen in over a decade. What do you think about corn down here?
There's really no way to spin it, I think, other than bullish. You know, when you have less corn in major exporting countries, the price of execution of trade has to be higher than it is now and higher than it has been the last couple of years. So unless those stocks numbers get much, much bigger, I think we're looking at higher prices.
So the corn market's dropped here because of Chinese trade. It's dropped because of this yield phenomena, or thought process anyway, because of high crop ratings. Maybe the U.S. corn yield can be above 180 or as high as 182 bushels per acre. There's a long growing season ahead. And should corn have a problem, I think your end stock estimates on corn is where, about 1.4 billion bushels, give or take?
That's right, yeah, so about 800 million bushels down on the year. It's sizable.
So if we look at that along with world corn stocks, and there's even discussion about China maybe being a corn buyer sometime later this year, we really start elevating our export estimate. I know you at AgResource have a corn export forecast that's about 225 or 250 million bushels above USDA.
That's right, and it could be even higher. As we're getting into the Black Sea growing season, there's not a lot of rain there. It's getting very hot. So as we start to adjust those world numbers down, I think those have to be given to the U.S. So that's kind of the message. We can yield our way out of this in the U.S., but I think, like you mentioned, it has to be a 180 at this point to prevent higher prices.
So if you look at the downside in corn, maybe it's 360 or 370 at the most as we think about nearby. If there's a weather problem, can corn make it back to 4.5 or something like that if we get heat during pollination?
Yeah, I think so. The season average cash price already should be about $4 if we can sort out these trade issues. So if there's a weather problem, that can go to 420 or 430 very quickly, and assuming normal basis, yeah, that's 450 spot futures, without a doubt.
Okay. My name is Dan Basse, joined by Ben Buckner. I'd like to remind everybody, during that corn pollination phase, we can lose as much as 7% of the daily corn yield in just a single day. So weather during that pollination time frame that'll stretch from late June until late July is going to be exceptionally important. Everybody have a good weekend. We'll be back again.